Everyone, and welcome to this video where we will be discussing Learning Objective 5.2, which deals with showing the linkages between the income statement and the balance sheet, as well as the statement of retained earnings and the balance sheet. So this is a piece of cake. All these things are connected, and so we're going to look at this together. Let's go over to the computer. All right, on your screen you should see the income statement for overnight auto service, and this is the same statement that we were looking at in the last learning objective for this module. And as we said, there's revenue, there's expenses, and then we have taxes, and finally we arrive at net income. So where does that net income go? Well, net income eventually ends up in retained earnings in the balance sheet. So how exactly does that happen? Well, each period, at the end of each period where we're collecting data for the accounting system, each period when we're making financial statements, at the end of that period, there's a special type of journal entry that we do called a closing entry. And what the closing entry does is it sweeps, collects, and moves all of the revenue and expenses that appear in the income statement. It moves all those things out of the income statement and into the retained earnings account within the balance sheet. So as you can see here, we have the income statement up top, and what this is showing to us is that this net income from the income statement moves into retained earnings. So this particular company, they had no retained earnings at the beginning of the year. Maybe they were just a startup company. And remember, retained earnings represents income that this company has made but not yet returned to shareholders. Okay, so if we're a startup company, then the company hasn't made any income yet, and so there isn't any income to return to shareholders. So at the beginning of this period, this company had zero retained earnings. This is their first year of operations. But during the first year, they make net income of $39,942, and that amount eventually ends up in this retained earnings account. So this statement of retained earnings is explaining how retained earnings last year changed to where it is currently. So to do that, we need to add in net income, and we need to subtract any dividends that we paid. Any of the income that we've made and paid back to shareholders, which we call dividends, that needs to be subtracted from retained earnings. So add income, subtract retained earnings. All right, and so we arrive at a retained earnings number for the end of the year of $25,942. It's not the same as the income number, $39,942, because of that $39,942 that we made in income, we've paid back $14,000 to shareholders. So the amount that we're retaining is $39,942 minus $14,000, because we've given that back to shareholders. So what we will see in the balance sheet then is a retained earnings number of $25,942. Right, so it's coming from this statement of retained earnings, and that statement of retained earnings is being driven by this net income, which comes from the income statement. So you can see the connection here. Income statement flows into retained earnings flows into the balance sheet. All right, so I hope in this video you are now getting the sense for how these financial statements connect, and keep studying this material. This is easier than you think it is. Keep working and you're going to do great. Take care.